And we're back. So we left off talking about the difference between product cost compared to period cost. Again, when you think about product cost, this is the cost to actually manufacture a product. It consists of your direct material costs, direct labor costs, and your manufacturing overhead costs. These costs initially go into what's called the inventory account, which is an asset. The inventory account is an asset reported on the balance sheet for the company. Once the inventory has been sold, the cost of the inventory goes into an account called cost of goods sold, which is an expense account. The actual sales price represents what's known as revenue. The income statement shows revenues and expenses. Now, compared to period costs, these are non-manufacturing costs, your selling costs and your administrative costs. These costs are goes into an expense account as they incur, and the expenses are shown on a statement known as an income statement. Okay? So let's see. Which of the following costs would be considered a period cost rather than a product cost in a manufacturing company? And I give you a hint, you may have more than one correct answer. So again, which other cost would be considered a period cost rather than a product cost? Again, you think about your period costs or your selling expenses and your administrative expenses. So which ones did you pick? A, B, C, D, E? So if you chose B and E, you are correct. The property taxes on the corporate headquarters would be an administrative expense. Now, if it said property taxes on the warehouse, that would be a product cost. And then the sales commission paid to the sales staff will be a selling expense. Example we call period cost. Okay? Now let's talk about cost behavior. Trying to predict the cost behavior. What does that mean? It means if I can identify my type of cost, whether the cost is fixed, variable, or what we call mixed cost, that will help me in my budgeting and my planning process. So we're looking at what's known as variable cost, fixed cost, and what's known as mixed cost. Okay? So let's talk about variable cost first. A variable cost is a cost that varies in total in direct proportion to the changes in the level of activity. A variable cost per unit is constant. You're probably saying like, what? So let's discuss it again. A variable cost is a cost that varies in total in direct proportion to changes in the level of activity. A variable cost per unit is constant. So let me give you a very quick example. Let's say you're at a parking meter, okay? And the cost is $1 per hour to park at that parking meter, okay? So the variable cost is constant at $1 per hour, but the total cost depends upon how many hours you are at that parking meter. If you're there for 1 hour, you'll pay a total of $1, but if you're there for 5 hours, you will pay a total of $5. So a variable cost is a cost that varies in total based upon the level of activity, but a variable cost is constant per unit. So when we talk about the activity base, the cost driver, the activity base is some type of activity that's going to impact the total cost, whether it is machine hours used, the number of units produced, the miles driven for a vehicle, or the number of labor hours. For each of these items, there's a variable cost per unit. Let's look at labor. Let's say we're paying an employee $10 per hour. So the variable cost is $10 per hour. But the total cost is based upon the number of hours that employee works within a given pay period. Okay? Then we have what's called fixed cost. Fixed cost is the cost that remains constant in total regardless of the change in the level of activity. But if expressed on a per unit basis, the average fixed cost per unit varies inversely with changes in activity. Again, you're going, what? Let's talk about it again. So a fixed cost is a cost that remains constant. Let's think about a manufacturing plant that we're using to make products, and we're paying rent of $1,000 per month. Okay? If you produce 1 unit, your rent is how much? It's $1,000. If I produce 1,000 units, my rent is how much? $1,000. So because the cost is fixed, the cost remains constant regardless of the level of activity inside of that warehouse. However, but based upon a per unit basis, if I produce 1 unit and my rent is $1,000, then my rent would be $1,000 per unit. But if I produce 1,000 units and my rent is $1,000, my rent cost now becomes $1 per unit. So the fixed cost does remain constant in total, but the fixed cost per unit varies based upon the change in the level of activity. That makes sense to you? Okay. So let's say that with fixed costs again, that we have what's called a relevant range. And for our example, we're saying that assuming we rent our office space and the rate is $30,000 per year in increments of 1,000 square feet. So if I rent out office space between 0 to 1,000 square feet, my total rent paid is going to be $30,000 per the year. Now, I know that we don't necessarily pay rent for a year in advance, so we can break that down, and our rent is going to be $2,005 per month. Now, notice that rent is $25 per month, $30,000 per year within a relevant range, that range being 1,000 feet. Once you're outside that relevant range, then the price is going to change. Because if I rent space between 1,001 and 2,000 square feet, now my cost becomes for the year $60,000 because now I'm within a new relevant range. Remember that the rent cost is $30,000 per 1,000 square feet. If I rent a space greater than 2,000 but less than 3,000 square feet, now I'm paying $90,000 for the year in rent because once again, I'm in a different range. So we're saying that fixed cost remains relevant within a certain range. Once that range has been increased, then the total fixed cost amount is going to change. Okay? So just to put things in proportion, we know that variable costs, when it comes to total variable cost is based upon the activity level. So again, we go back to our parking meter. If I park there for 1 hour, I'll pay $1. If I'm there for $7, I'm paying $7. But my variable cost per unit remains constant at being $1 per hour. Fixed cost stays constant in total. My rent is going to be $1,000 per month, regardless of the number of units I produce within that time period. But my fixed cost per unit will change based upon the activity level. So again, if I produce 1 unit for that month, then my fixed cost per unit would be 1,000 in terms of my rent. But if I produce 1,000 units within that month, then my fixed cost would be $1 per unit. So fixed cost stays the same in total, but it changes per unit. Variable cost changes in total based on the activity level, but variable cost stays the same per unit. So which of the following costs will be variable with respect to the number of ice cream cones sold at Baskin Robbins? So depending upon the number of ice cream cones sold by Baskin Robbins, which of these costs would be considered variable costs? If you said C and D, you're correct because the cost of the ice cream, direct material, is going to be impacted by the number of ice cream cones that we sell. The cost of napkin for a customer, which is indirect material, will also be impacted by the number of ice cream cones that we sell. Okay? So we have what's called mixed cost. What's mixed cost? It is a combination of variable costs as well as fixed costs. Think about your utility bill. Think about your electric bill. There's a component of the electric bill that's going to be fixed, meaning that if you were to leave town for the entire month, turn everything off in your place, house, or apartment, didn't have any TVs on, no lights, no nothing. Guess what? You will still get a utility bill for a certain dollar amount. That amount is going to be the fixed portion of the utility bill. Okay? Now, based upon how often you turn the lights on, run your air conditioning unit, turn the TV, etc., there's going to be a cost per kilowatt. And the more kilowatts you use, the higher your cost is going to be. So you're going to have a fixed component of your utility bill as well as a variable component. And when you add those two together, that would give you this mixed cost or the total cost for your utility bill. Now we have a formula for getting total mixed cost that says y equals a plus bx. Y equals the total mixed cost. A is the total fixed cost. B represents the variable cost per unit, and X would be the level of activity. So we're saying that if I look at the fixed cost component, if I look at my variable cost per level of activity and take it times the activity level, then I get my total mixed cost. You want an example? Got one for you. Let's say that your monthly utility charge is, your fixed monthly utility charge is $40. Your variable cost is 3 cents per kilowatt hour, and for the month, the activity level was 2,000 kilowatt hours. We're saying, what is the amount of your utility bill? So the fixed component is $40. That's your A. The B is your variable cost per unit, which is 3 cents per kilowatt hour. And X represents the activity level, which is 2,000 kilowatt hours. So if I take the 3 cents times 2,000 hours, that'll give me $60 plus the fixed cost of $40. It gives me a utility bill in amount of $100. So we use the formula y equals a plus bx to calculate our total mixed cost when we know the fixed cost amount, we know the variable cost per unit, and we know the level of activity. Okay? We're going to come back with one last video to conclude our discussion over Chapter 1.